Good evening. I am going to go over chapter 3. And so there's a couple objectives in chapter 3. So for one, we're going to explain how the adjusting entries match revenue and expenses to the appropriate time period. And then we're going to prepare adjusted trial balance. And then the last thing we're going to do is identify the steps in the accounting cycle. So many transactions happen during an accounting period. And so we're going to record those into a journal entry and then a trial balance. So we've seen that in prior chapters where we had several transactions that happened and we had to make journal entries. So we're going to walk through some of that now. Let me share my screen and go to some transactions. So here are the transactions for December 2019. So several transactions happened, and I will not go through all of them, but I'll go through a couple just so you can get the gist of what it looks like to complete all of these. And so we have transactions on Part A and Part B, and then you have T accounts. Okay, so let's look at A and B. So issue common stock for cash for $2,000. So if you go to your T accounts, we have cash. Cash is a normal debit balance because it's an asset. Asset has normal debit balance. So you issue common stock for cash. So that means you receive cash. So when the corporations receive cash, it's an increase. And because assets is a debit, it has a normal asset. I'm sorry, since assets have a normal debit balance because it's in cash, then you would debit it. Okay. Again, so let me just say that again. Cash is an asset. Asset have a normal debit balance. So cash is increased here by $2,000. Okay. And then the offset to that is common stock for $2,000. So you put A here for the letter A from that transaction, and then $2,000 for the common stock. All right. So on B, it says pay cash for 3 months of rent, December 2019, January, and February 2020. So the way you calculate it is 3 months. So if you take 3 months, you have 800 here, 800 here, 800 here, and that gives you a total of $2,400. So 800 a month for 3 months is $2,400. Okay. And the way this will work is prepaid. So we pay cash. Okay. So if we go to our transaction, our journal entries, well, let's go to T accounts first. So T accounts, cash. Cash is an asset. Asset has a normal debit balance. So when you increase that asset, you debit it. When you decrease that asset, you credit it. So here, when we did our prepaid, we decreased it. So we decreased it by doing a debit for $2,400. And then our offset will be prepaid rent for $2,400. Okay, so we can do the journal entries for those two. So the very first one, we had cash, and our journal entries is right here in our T accounts. Debit cash, credit common stock. Debit cash, credit common stock. Same thing with prepaid rent. Prepaid rent. Debit prepaid rent, credit cash. Debit prepaid rent, credit cash. Okay, I'm going to jump all the way down to P because I want to show you what that looks like. So the December portion of the rent paid on December 1st has expired. So what they mean is expired is that we are in December, so we need to pay our December rent. Now we've actually physically prepaid it, but we want to recognize that expense in December. And so the way you would do that T account is you would take 800. Where's my prepaid rent? Prepaid rent. We're going to debit it for 800 for prepaid rent. And then we want to recognize the rent expense in December. So debit for 800 for December, and then credit the rent expense. I'm sorry, credit the prepaid expense and then debit the rent expense. All expenses have normal debit balances. Okay, so we're going to debit rent expense and credit the prepaid. And so our journal entries will look like this. Prepaid rent is a debit of 800 because we're only expiring the portion of December, which is 1 month. And then prepaid rent is going to be 800. And so every month for the next 3 months, you're going to do a credit to the prepaid rent so you can offset this debit. So this would eventually be zeroed out. All right. And so then once you get to the trial balance, you're going to look at all of your journal entries. And then your journal entries is going to be the net of your debits and credits, okay, from each account to be used on the adjusted trial balance. So if you have cash as a debit, you'll increase. So you have plus 2,000 minus 2,400 and so on for the cash account. And you would do that for every account. And then on a trial balance, you would have a adjusted debit or credit balance for the cash, okay? And then do the same thing with accounts receivable. Once you complete this adjusted trial balance, then you can compile your financial statements. You have an income statement, which your revenue minus your expenses gets you to a net income number. And then you have your balance sheet, which is a snapshot of the business. You have your asset, everything the corporation owns, and then you have your liabilities, which is everything that you owe for the corporation. And so that account equation is asset equals liabilities plus owner's equity. Okay, and that is your balance sheet. And then you also have a statement and changes in equity. Okay, so once you complete this adjusted trial balance, you can then compile the statements, okay, your financial statements. I hope this helps. Thanks for watching. Email me if you have any questions. Thank you.